Hi everyone, and welcome. I'm Tapio Erikainen, Communication Manager at Triangular Capital, and today I'm here with Pietari Laurila, eToro Pro Investor. We thought this would be a good moment to look back at the first half of 2026, talk about what has happened in the markets, how the portfolio has developed, and where Pietari sees the most interesting opportunities from here. So, Pietari, let's jump straight in. How would you see or describe that the first half of 2026 has been for you as an investor?
Well, 2026 has been a more difficult year for me than previous years. So my portfolio, it did really well from 2021 to 2025. But in 2026, I think the big first surprise for me was the Iran war, which started at the end of February this year. So the portfolio was positioned quite aggressively before the war in European stocks. And then obviously the war happened, oil prices increased, and people became a little bit more cautious about the European economy. So a lot of the companies that I had in the portfolio at the end of February, they went down. And as a result of that, the portfolio as a whole declined around 10% in March. So then in April, we got the ceasefire in Iran, and then the market started to recover. So in the beginning, I had a little too much cash in the portfolio. So that was a bit tough period. Also, what's been happening this year is that the AI stocks, so the artificial intelligence companies, they done like really well this year. And I don't generally invest in technology stocks, which this year has been like a headwind. So now more recently, the portfolio has again done a little bit better. So it has recovered the losses from earlier this year. But I mean, still, I would say that it's not really been like the kind of year when my style has worked the best.
All right, thank you. Yes, the beginning of the year was probably quite challenging for many investors. But how about where do you see currently that the most attractive investment opportunities are? And which areas of portfolio are you particularly excited about?
Well, I would say that the real estate companies in the portfolio, they could work. So you can see there's a big discounts available in the markets because people are quite cautious about the path of interest rates. So most people believe that interest rates are going to go up. And in that kind of like a scenario, real estate companies don't tend to do well. So you find many European companies from the real estate industry trading at 50% discounts to the value of the properties that they own. And that could potentially be an opportunity if interest rates stay stable. And maybe if oil prices decrease, then that will happen. So let's see.
All right. Yeah, that sounds very interesting. Let's see what happens. But let's talk about the risks a little bit. So what are the key risks and market developments you are watching most closely at the moment?
Well, obviously, the Iran situation still isn't completely resolved. So we have a kind of ceasefire, but it's not really like 100% ceasefire. So I live in the UAE, so I'm in Dubai right now. And what you see here is that like nothing is really going on. So we are not getting like any alerts. Everything is 100% normal. But at the same time, we know that in the past few weeks, there's been skirmishes between Iran and the US, and there's still no peace deal. The ceasefire is either over or a little shaky. So we don't really know what's happening with that. And so far, the market's been okay. So oil prices, people feared that they would increase to $150, maybe even $200. Well, they haven't done that because there were a lot of oil inventories before the war. China reduced its purchases, and these factors have kept like a lid on oil prices. But it's still a risk because if the oil doesn't flow properly, then eventually the inventories will be depleted. Maybe China will have to again start buying more, and then oil prices could still increase again. So that's really what I'm keeping an eye on.
Okay, good. And do you think there's any risk that the markets may currently be underestimating or, yeah,
Underestimating like this risk?
any other risk that or any risk that the markets are currently underestimating?
Well, I mean, I would certainly say that the markets are pretty complacent at the moment. So if you look at like some surveys that certain investment banks carry out, then you find that most investors are optimistic right now. And this historically has actually been a bad sign, so like a contrarian sign. So you should be always a little bit cautious when everybody else is optimistic, and conversely, you should be optimistic when everybody else is pessimistic. So right now we have a very strong economy in the US. There's like very good momentum in the AI trade, lots of AI investments going on. Unemployment is low. Inflation is still under control, at least somewhat, although it might be bubbling a little bit under the surface. So right now everything seems to be going like really well, which also makes me a little bit more cautious about the prospects for the next few years. Maybe it's not going to be a problem for the next 6 months, but if you look at more like the whole of 2027 or 28, then I think we could see some more turbulence.
Okay. And is there anything that would make you significantly reduce risk from the current levels?
Well, I'm certainly monitoring the OECD leading indicator. So this indicator tells you whether the economy is accelerating or decelerating at any given moment. So right now, this indicator says that the economy is still accelerating. So it basically gives the green light to take on risk. But if it turns and it starts to go down, then it means that the economy is decelerating, and then that would be one signal to potentially dial down the risk level of the portfolio.
Okay. All right, then let's move on to the next, actually the remaining of the year and the next year as well a little bit. So looking ahead, how would you see that the second half of 2026 would be, and what is your overall market outlook, and what do you think could drive the portfolio performance from here?
So I'm still optimistic about the rest of the year. I think the economy is going to stay strong. You can see that in the US, I mentioned the AI investments. Like even in Europe, you can see that the industrial economy is accelerating at the moment. So I do believe that there's a good scope for the markets to rally further over the next few months until the end of the year. But at the same time, we've had like an economic expansion for more than 3 years already. So the economy turned up in late 2022. So that's well, actually almost 4 years ago already. And it's very rare for expansion to last this long. And looking at the current state of the economy, I have like this hunch that next year inflation is going to become a problem in the US especially. And then the Federal Reserve in the US is going to have to increase interest rates. And then that's going to start to slow down investments and the overall economy. So maybe that would only start to happen from like mid 27 onwards. But if I look at like the whole of 27, then I don't think we can expect like the similar good years, like such easy years to continue. Like we've had very easy years, 23, 24, 25, 26. So the market's just been going pretty much up in a straight line. And it's not always like this. So we can't expect this to continue forever. And I think the thing that would end this expansion would really be the inflation situation in the US.
Okay. All right. Well, thank you, Peter, very much. Maybe one more question, like what would be your message to your copiers in eToro? If you have any one message, what to keep an eye on and follow.
Well, I think for many people right now, the AI trade is really like the one that people are focusing on. And these stocks look like really interesting, like in the sense that they've been going up a lot and they're making massive profits right now. So you look at companies like Micron and other memory stocks, the profits have increased like 10 times in just 1 year. And the stock price is like similarly. But I think that like AI, it's like a massive mega trend. It's really going to change everything, like the economy, like the kind of jobs that we are going to do in the future. But at the same time, we have to be a little cautious as well, because there's a big history of these kind of booms ending in busts. And I'm sure it's going to be the same with AI. Again, I don't think it's going to happen in the next 3 months or the next 6 months. But just something to keep in mind that like if your portfolio is very concentrated in technology stocks, in AI stocks, then it might be worth thinking about when to diversify away from that part of the market, because it's just not going to last forever. That's a very strong belief that I have, because it's always been like that in history. We remember the internet bubble, and what happened after that. So and after that, actually, like value stocks were like really the place to be for many years. And I wonder if the same thing might happen again after the AI bubble or AI boom, let's say, turns to a bust.
Yeah. All right. That sounds very interesting, and especially in terms of your portfolio being a mostly like value investing portfolio. But Pietari, hey, thank you for your time, and all the best in your investments, and we'll keep continuing these discussions.
Okay,
Thank
thank
you
you,
all.
Tapio.
Bye bye.
Bye.